Hey, do you want to know 3 crazy things you can do with a mortgage on a lease option? Now, my name's Kevin Wright, and I've been brokering property finance for over 20 years. So if you want to learn how mortgages and lease options work together, keep watching. Now, if you watch some of my videos, you'll know that people tend to ping me questions that they want me to answer about property finance. Now, here's what I got. Now, these guys had done a purchase lease option with the owner of a property, and they'd agreed to buy it. The strike price was $295,000. Now, they did a 3-year lease option 2 years ago, so they've got 1 year left. Now, with a combination of a bit of work they've done on the property, plus some increases in the general market value, they now think it's worth at least $400,000, pushing up towards 500. Probably not at 500, but pushing up somewhere towards 400, maybe 450. Now, if you're watching this video and you're thinking, what the hell is a purchase lease option? Let me give you a brief understanding. It's a contract that gives you, the buyer, the option, but not the obligation to complete on a purchase in a given time frame. In this particular case, 3 years. Sometimes they're longer than that, 5 years or even 10 years, but in this one it was 3 years. Now, although as the buyer you've got the opportunity but not the obligation, the seller is locked into you as being the only buyer they can use for the duration of the option contract, again, in this case 3 years. So as this couple saw it, they had 2 options. Here's the first option. Try and find a mortgage lender that will go straight to mortgage at the 400 plus valuation and not the 295 purchase price. Option 2, can they find a bridge to let lender who will bridge it at 295 and then flip it over to their mortgage product and valuing it at 400 plus. And their third option they thought of was, well, are there any other options? So let's drill down and look at these 1, 2 or even 3 options and see how viable are they. Now, option 1, remember that, try and find a mortgage lender that will lend on the current market value 400 plus. Now, I was sorry to tell them, and I'll tell you exactly the same, non-stop. No mortgage lender's going to do that, and here's why. It breaches mortgage lenders' requirement for an arm's length transaction. What does an arm's length transaction mean? Well, it means that there is no prior history and relationship between buyer and seller. Now, in the normal scheme of things, a seller would go to an agent who would market the property and then introduce them to a buyer, and the 2 parties have never actually met before. That's normal, that's what mortgage lenders like. But where buyer and seller have been known to each other for a prolonged period, e.g. 3 years, well, now that flags up all sorts of suspicions with mortgage lenders about collusion going on there. Now, clearly the exception to that would be family. If one family member is selling to another family member, that's a different thing, and mortgage lenders are more accommodating with that. So in this particular couple case, well, they've already known the seller for a couple of years because they did a purchase lease option with them a couple of years ago. So no mortgage lender is going to touch a deal like that. So option 1, dead in the water. There's something missing in your life, and I know what it is. It's subscribing to my YouTube channel. You know you're going to feel better. Subscribe, 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 subscribe. Click the link and the dingy belly thing and the Instagram. That feels so much better, doesn't it? Option 2, well, let's look at the answer to that. Can we get a bridging lender to lend at 295 and then put it on a mortgage product? Well, that's not going to work either. Sorry to be negative on this, but we've got 2 options that are non-starters. So why won't bridge to let work in this instance? Well, it's a very small market because the majority of bridgers don't do mortgages and the majority of mortgage lenders don't do bridging. But of that small group of bridge to let lenders, they only lend on 75% of the purchase price. So if you're buying at 295, as in this case, which is the option purchase price, well, you're going to have to put down the full 25% deposit. And then because they know you've done nothing to it since you bought it, they're highly unlikely to give you a mortgage. They're highly unlikely to give you a mortgage based on the uplifted 400 plus. So that won't work. And they said, is there an option 3? Well, yes, there is, and it's called market value bridging. So let's tell you how market value bridging would work in this case. Well, this is possible. Now, if you watch some of my other videos, in particular the one about what is a market value bridge, here's the thumbnail to give you an idea of what to search for if you haven't watched it yet. Now, a market value bridger will lend on the current market value, not the purchase price. So if we were brokering this deal, we'd be looking for one of those market value bridgers. They'd send their value around who would give it a 400 plus valuation, and they would lend typically 75%, not always 75%, but usually 75% of that valuation. So if it's valued at 400 plus, but they've agreed to buy it at 295, the deposit is going to be shrunk dramatically, and they're going to have to put next to no money down. Now, we've been brokering bridging loans like this to get people off of purchase lease options for a number of years. So you've bought it on a market value bridge, you put very small deposit down. How do you get off the bridging loan? Well, you can either wait 6 months and have a fuller range of mortgage lenders that would lend against the 400 plus value. If you don't want to wait 6 months, you could use a mortgage lender that actually doesn't require you to hold the property for 6 months. They will lend on the open market value, but you will pay a higher rate for that. Now, to get a mortgage valued at the 400, 450 or whatever that 400 plus value is, you have to demonstrate that you've made some tangible improvements to the property. Now, they're going to know that you bought it for 295, so that work that you did during those 2-year option period that was partly responsible for the increase in value. Document that fully and give that as evidence to the mortgage lender's valuer. They're not doing that and just hoping that the mortgage lender's valuer agrees that it's worth 400 plus when you've only just bought it for 295. It's probably not going to work. Okay, so there we are. Another property finance video in the bag, and I'll be back with another property finance video next week. See you then.
If you enjoyed watching this video, did you know every Monday morning at 8:30 I do a live Facebook Q&A. So if you want to start the week with checking out some answers to your property finance questions, click the link here.